Hey everyone, welcome back. Today, we're diving deep into a crucial decision every landlord and property investor has to make, whether to go with short-term rentals or long-term rentals. It's a choice that can really shape your investment strategy. By the end of this video, you'll have a clear idea of which path might be best for you. Short-term rentals, the high-risk, high-reward approach. Have you thought about short-term rentals as your landlording style? These are your Airbnb-style properties where guests stay for just a few nights or weeks. At first glance, it might seem like easy money, but there's a lot more to it than just higher rental income. One of the biggest draws for short-term rentals is the potential for higher income. You can charge a premium, especially in high tourist areas or during major events. Imagine owning a property in a city that hosts a popular festival. Those nightly rates can skyrocket. Even during regular times, renting out by the night or week can outpace what you'd earn from a traditional long-term lease. For instance, say a long-term tenant might pay you $1,500 per month, but with short-term rentals, you could be looking at $200 per night. Do the math. If you rent out 15 nights a month, you're already ahead, and during peak seasons, you might even double that. Short-term rentals, flexibility, and control. Another huge perk of short-term rentals is flexibility. Let's say you want to use the property yourself for a weekend getaway, or you need to close it down for a quick renovation, no problem. With short-term rentals, you're not locked into a lease, so you can block out dates whenever you need. Plus, if market demand shifts, you can adjust your pricing strategy to maximize your returns. And then there's the peace of mind that comes with frequent tenant turnover. If you get a troublesome guest, you're not stuck with them for months or even years. Platforms like Airbnb even have a review system, so you can screen guests more effectively before they arrive. Short-term rentals, tax perks and pitfalls. Let's talk taxes for a minute. Depending on where you live and how often you rent out your property, short-term rentals might offer some tax advantages. In some places, short-term rental income is taxed differently from long-term rental income. And of course, there are deductions. Expenses related to the upkeep and operation of your property, think cleaning, repairs, and even the cost of furnishing the place, can often be written off. But keep in mind, tax laws can vary widely by location, so always consult a tax professional. But it's not all sunshine and rainbows with short-term rentals. Let's look at the other side of the coin. Short-term rentals, the downsides. First up, income inconsistency. Sure, when your property is booked solid, it's great, but what about during off-peak seasons or economic downturns? Your income can drop dramatically if your property sits vacant. Unlike long-term rentals, where you can count on a steady rent check each month, short-term rental income can be unpredictable. And then there's the management aspect. Running a short-term rental is like running a mini hotel. You've got to clean and restock after each guest, manage bookings, communicate with guests, and handle any issues that come up during their stay. It's a lot of work. Some landlords hire property management companies to handle all this, but that cuts into your profits. Short-term rentals, regulatory and legal challenges. And let's not forget about regulations. The short-term rental market has become a target for local governments, especially in big cities. Some places have implemented strict zoning laws, licensing requirements, or occupancy limits. In extreme cases, short-term rentals might be banned entirely or come with hefty fines if you don't comply with local regulations. This means you need to stay informed and up to date with the latest rules in your area, which can be both challenging and costly. And finally, the issue of property damage. More guests mean more wear and tear. While platforms like Airbnb offer insurance, dealing with claims can be a hassle, and some things just can't be replaced easily. So, if you go the short-term route, be prepared for a higher level of property maintenance. Long-term rentals, the steady hand of real estate investment. Now, let's shift gears and talk about long-term rentals. This is the more traditional route, finding a tenant who will sign a lease for 12 months or more. The biggest advantage here? Stability. With long-term rentals, you've got a predictable income stream, in theory. You know exactly how much money is coming in each month, as long as your tenant pays the rent, which makes budgeting and financial planning a lot easier. This is especially appealing if you're looking for a steady, reliable income without the ups and downs of short-term rentals. Long-term rentals offer lower management and maintenance. Another perk? Less weekly management. Once your tenant is in place, there's not much to do beyond addressing occasional maintenance issues, collecting rent, and maybe dealing with a lease renewal. This means long-term rentals can be a much more passive form of income compared to the constant hustle of short-term rentals. And because your tenants are likely to stay for a while, you're not constantly worrying about filling vacancies or marketing your property. Lower turnover means fewer periods of lost income and less work overall. Plus, in many long-term rental agreements, tenants are responsible for their utilities and day-to-day upkeep, which reduces your operational costs and workload. Long-term rentals, the cons. But as with anything, there are drawbacks. The biggest one, lower income potential. With long-term rentals, your rent is fixed for the duration of the lease. This means you could miss out on extra income if the market rates rise or if you could have charged more during peak seasons. And once that lease is signed, you're locked in. There's less flexibility if you want to adjust the rent, change the terms, or even use the property yourself. You also need to be careful during tenant screening because if you end up with a problematic tenant, you're stuck with them for a while. The eviction process can be time-consuming and expensive, so it's crucial to get the right people in your property from the start. Long-term rentals, ROI, and property appreciation. In terms of return on investment, long-term rentals might not offer the same potential for rapid appreciation as short-term rentals. The lower rental income and less frequent tenant turnover can lead to slower capital growth. Over time, you might need to invest more in property maintenance and updates to keep your property attractive to long-term tenants. But don't let that discourage you. The slower, steady approach of long-term rentals can be ideal for investors who prefer a lower-risk strategy and want to focus on building a reliable income stream over time. Making the right choice. So how do you decide which strategy is right for you? It really depends on your goals, resources, and risk tolerance. If you're looking for higher income and don't mind the extra work, short-term rentals might be your best bet. But if you want stability and a more hands-off approach, long-term rentals are likely the way to go. In some cases, a combination of both strategies might be the perfect solution. For instance, you could rent out one of your properties short-term, capitalizing on those peak season profits, and rent another property long-term for average stability. It all comes down to your property's location, the market conditions, and what you're hoping to achieve as a landlord. I hope this breakdown helps you weigh your options and make an informed decision about your rental strategy. Remember, there's no one-size-fits-all answer. It's all about finding what works best for you and your investment goals. Thanks for watching. Don't forget to like, subscribe, and drop a comment below to let us know what kind of rental strategy you're leaning towards.